Hello and welcome to the Greater Springfield Business Connect podcast, or as we call it, the GSBC. Proudly brought to you by the Greater Springfield Chamber of Commerce and powered by Purple Bunny Marketing. I'm your host, Matt Taylor Farrington, and today I am joined by Steve Foulis from MoneyQuest. Thank you for coming along. Have a chat.
Worries. Thanks for the invite.
So we'll dive straight in. For people who have never used a mortgage broker, how would you describe what MoneyQuest does and how that differs from that of a bank?
Yeah, good question. So at MoneyQuest, we've got access to 30 plus different lenders.
Yep.
We'll do the research across all those lenders, try to match that to clients' individual circumstances.
Yes.
And then we come up with recommendations that best suit that client's circumstances. Now, when someone walks into a bank, they've only got their own products.
Correct.
And they can only recommend and sell their own products.
Yes.
Now, sometimes those products may not be most suitable for those clients, but they can still provide them, which is fine. I worked for the banks for many years as well, and that's what they do. But we try to look after the best interests of the clients.
Yes. Yeah, definitely.
Yep.
You mentioned that you have access to over 30 lenders. I guess what does that actually mean for a borrower when they're trying to find the right loan?
Yeah, so we get a lot of information from lenders, a lot of updates to credit policy, to what their niches are, what their risk appetites are.
Yes.
Sometimes they're after first home buyers, sometimes they're after investors.
Yep.
Sometimes they're targeting refinances. And so we get all that information and make sure that, that when we're doing recommendations for clients we're getting the most suitable lender that best suits them.
Yeah.
And that changes over time as well. But it's it takes a lot of time to do all the education programs and all the research. But that's what we do and that's what we love doing.
Yeah. And I guess one of the benefits, having used a broker myself, that obviously knowing the appetite of the different lenders allows you to kind of push that person into the right application so that they are going to get that without having another hit to their credit file potentially with a lender that might not have an appetite for what they're looking for, correct?
Exactly right.
Yeah.
And that hurts clients, They've got multiple inquiries in a short period of time.
Yes.
It does hurt their credit score and then it reduces the amount of lenders that you can recommend. So
correct.
So it's really important to match them to the right lenders and we'll generally give clients sort of 3 to 5 of the most suitable options.
Yes.
End of the day, it's client's decision to who they want to go with. But, sometimes it might not be the lowest rate either. It comes down to service, rate, and some clients just like particular lenders as well. So.
Yes. Yep, agreed. All right, so mortgage brokers are now held to best interest duty by ASIC. What does that legal obligation change and how do you work with clients?
Yeah, so that came in a few years ago now, and when it came out, it was initially it was a bit daunting. We were legally obliged to make sure that we provided the right products for clients, and but we've been able to work through that and get over it quite quickly. And now it's a real advantage for us because we can explain to clients that we're legally obliged to put clients in the most suitable and most competitive products.
Yes.
Whereas banks don't need to do that.
Yes.
So we see it as a real advantage and again, there's paperwork, there's documents and when we recommend products to a client, there's a document called a Statement of Credit Assistance and, it can be 20 pages long, but it shows evidence as to why we've chosen that product for the client.
And I guess it just gives the general consumer confidence that using a broker is probably the better solution because they've got your best interests at heart. So
exactly right. Yeah.
All right, so the home loan market has been on a wild ride over the last few years with rates going up, coming down, going back up again. What are you seeing in the local market right now? What are you seeing happen?
Yeah, well, as we all know, recently the budget came out as well, and and threw a few spanners in the works. But I won't get into the politics of that. But
the podcast isn't long enough.
No, exactly right. But rates have gone up recently, and it's been hard for a lot of people.
Yes.
And a lot of economists are saying, that potentially there may be one or two more. Who knows? But what I tend to say to clients is what everyone's talking about today is based off data that they've had recently, whether it's unemployment data, inflation data, or growth data and things like that. The narrative can change pretty quickly.
Yes.
So in 2 months, 3 months, 4 months, they get a new set of data and things can change. So people just need to go along for the ride a little bit. Things aren't always the same at all times, and there's still opportunities in everything, and you just got to work through the jargon and all the information and speak to people like us and their accountant and things like that, and make right decisions for themselves.
Yeah, agreed. All right, so first home buyers in Greater Springfield are facing a very different market to one that their parents obviously bought in.
Yeah.
What's your advice for someone trying to get their foot in the door?
Yeah, well, our parents came in here at the start of development, or midway through the development, and they didn't have everything that we've got here today.
No, correct.
All the hospitals have been built, there's a stadium that's been built, there's car parks, there's lots of employment.
Yes.
But parents came in during the early stages and now they're reaping the rewards of that with, the property values and things like that. For someone coming into the market now, it's, they're probably not going to go directly right in here.
Yes.
Might not be affordable for them, for a lot of people. But there's other areas in the region that are going through similar development.
Yes.
And they're probably areas they need to target. They've got to look for planned infrastructure and schools and transport and all those sorts of things. And they can do exactly the same thing that their parents thought many years ago. Now, they might say it's too far out or something like that, but the parents probably thought that too.
Yes, correct.
So, you buy in developing areas, and you can, and then you can grow equity over time, and get the same benefits.
Yes, agreed. I think sometimes you got to look at where the next growths are. I mean, looking obviously further afield, but you got your Ripley, South Ripley corridor, which have expanded quite rapidly. Yeah. And then you obviously got Deebing Heights, and you got all those areas going out that way. So whilst I understand it's further out, it's if you want to get your foot in the door and get into that market, then
it's a great opportunity for young people.
100%. All right, so beyond home loans, you also help with commercial vehicles and business finance. How often do clients come in for one thing, I guess, and end up getting help with something else, or end up bringing you everything to help sort or resolve?
Yeah, it happens a lot. We might start with a home loan inquiry, and sometimes we might even not fulfil that inquiry, but most people have got a personal loan or a car loan, or they've got a need for that.
Yes.
Or they've got credit cards they want to consolidate and things like that. So we pride ourselves on being a one-stop shop for finance. So we can handle any finance inquiry, whether that's directly by us or with support from business partners. We can handle anything. And we regularly do commercial loans, business loans. We support a lot of self-employed people.
Yes.
We really understand self-employed people. I'm self-employed myself, and we understand the challenges and their aspirations and things like that. And again, particular lenders love self-employed people.
Yes.
And that's where we can help with them. One big thing we're seeing at the moment is self-managed super funds, or SMSF.
Yes.
In the recent budget, that wasn't really touched in terms of the changing of the rules around capital gains tax and things like that. And there's specific rules with SMSF that people obviously need to talk to their accountant and financial planner about. We're seeing a lot of that, and it's a completely different investment vehicle for property. It's separate to personal name lending. One doesn't affect the other. We have a lot of clients who actually do both. They might buy an investment property in their personal name and then come to us and buy one in an SMSF. So it's becoming a really popular way to look at and grow retirement wealth.
Yes. Yeah. All right. What's some of the biggest mistakes you see people make when they're trying to sort their finances on their own?
Yeah, look, it's a big transaction. Like people don't want to jeopardise. When they're trying to buy their first home or investment home or trying to refinance to get a better deal, they don't want to jeopardise that. And when you put an application in front of an assessor, first impressions count.
Yes.
And you don't want to make silly mistakes and things like that, and then potentially have to go to another lender and all those sorts of things like we talked about before.
Yes.
So you got to get it right at the start.
Yep.
And that's why we go through that process of getting all the information and doing the research, etc. Now, probably the biggest mistake I see from people is not declaring all their debts.
Yes.
People forget about the interest-free credit card that they got a few years ago. They forget about Afterpay, ZipPay, all those sorts of things.
Yes.
And it's really important because if we don't declare that up front, an assessor will look at it and say, okay, well, why didn't they declare it?
Yes.
What else are they hiding?
Yes.
It just puts doubt in their mind.
Yep.
And so that's probably the biggest thing is just, we see everything. It's all on credit reports.
That's right.
So you can't hide anything. It's going to be there. And we help clients through that process as well. So
yes, agreed. All right, so the federal budget, RBA decisions, lender policy changes, there's a lot of noise. How do you help clients filter what actually matters for their situation?
Yeah, we do a lot of education with our clients.
Yep.
Whether that's giving them updates on certain things that's happened in the market. Via email, if we need to reach out individually to clients, we do that as well, particularly if they're sort of partway through a transaction or looking at one.
Yes.
We've also got business partners, whether that's lenders, other business partners, property groups and things like that, where they share their views on where the market's going and things like that. So we share invites with our clients who might get some benefit out of that.
Yep.
We send a monthly newsletter to all our clients.
Yes.
So that has information on it that they can explore a bit further.
Yep.
And so it's just about that education process and making sure that, obviously you're not going to understand everything, but if they've got a broad view of things, it can help their decision making.
Yep, agreed. All right, so you've built a local presence. What's it been like growing a finance business alongside and with the Greater Springfield community? Yeah,
it's been fantastic. To see the growth in this area has been amazing. Like I remember seeing the hospital get built and the stadium get built. We had tours around that stadium before it was when it was during the building process.
Construction, yes.
Yeah, and to see the growth has been amazing. To see the growth in property values. I mean, people trying to get in, it's a bit harder, but we put clients in their first home here many years ago, and now with the equity they've got options to consider.
Correct.
They can look at investment properties, they can look at doing whatever they want, buying shares or whatever. So it's been fantastic to see that growth, and we've grown with it, obviously.
Yep.
We help a lot of clients in this area. We also help a lot of clients in other areas of South East Queensland and Australia-wide. Yes. But it's only, as we said before, it's continuing to grow in the outer regions as
Correct.
well. So
yeah. All right. So looking ahead, what trends do you think will shape lending and home ownership in this region over the next 3 to 5 years?
Yeah. Well, as we touched on before, the growth has happened here.
Yes.
The infrastructure's pretty much happened right in Springfield.
Yes.
So the people living here now, at least as we mentioned, they've got equity. They might be looking at home upgrades. They might be looking at investment properties. They, as their family grows, they consider all those options.
Yes.
But the exciting thing is for new people coming into this area, first home buyers. As we mentioned, there's lots of opportunity in the growing areas outside this particular centre, and it's great. You got a little mini city here, so you live out at Ripley or South Ripley or things like that. Yep. You got a little mini city here, which is going to continue to prosper and grow. So it's
Yes.
so I see that, and there's lots of opportunity for first home buyers to take advantage of first home owner deposit schemes.
Yes.
So they need 5% deposit to get in the door, or even less in another scheme that's out as well. So they just need to look at the opportunities. They can get family support as well. There's opportunities with family guarantee loans where parents have grown equity in their property. They can support their children through family guarantee loans and things like that. So they just got to reach out, and then even if they're not ready now, we put a plan in place.
Yes.
And get them ready.
Yep. Agreed.
Yeah.
All right. Well, that's all we have time for, but thank you for coming along, having a chat to us. Appreciate you jumping on the podcast, and thank you for tuning